Hi there, welcome to kneppyinvest. In this video, we're going to be talking about Megaport, in particular, looking at their Appendix 4C that they released on the 22nd of April 2021. It's fair to say Megaport is a fairly popular company among fund managers, particularly active fund managers, and those fund managers who are looking for growth, even though a company may not be profitable. And Megaport definitely falls into that category. Quite exciting company in terms of growth. They're not yet profitable, but I do think this is a major, well, a global leader in elastic interconnection services, which that sort of goes over my head when I talk about that. And there's going to be a lot of people out there who know a lot more about elastic interconnection services. So let's get into some facts in regards to Megaport. Megaport listed on the ASX in late 2015, and share price actually did not do much for over the first few years of their life on the ASX. And then everyone got interested in this company. It was a darling of the ASX for a period of time there. I could not stop hearing about Megaport. You could see their growth in their revenues, but they have never been profitable. And there's going to be few fund managers, investors out there who would not even have this company on their watch list simply because they're not profitable. That's a very important fact for a lot of investors. For instance, Team Invest, that sort of community of investors, would not even have this company on their radar. I do believe they need 4 years of profit before they get interested in their company. Anyway, there is a lot of interest in regards to Megaport out there. Ticker code MP1, market cap of 2.1 billion, and for the very fact they're not profitable, to have a market cap that size just shows you there's a lot of people who believe the growth for this company will be there in the next decade or so. Because if you're buying into Megaport when they're not profitable, you do expect them to eventually become profitable, and highly profitable at that. Revenue has been growing in the trailing 12 months, where it's risen to 68.2 million. And I'll show you the cash receipts chart in a few slides. And it actually has been quite impressive. Still burning through a lot of cash. In the trailing 12 months, they burned through $14 million of cash. So there's one metric some people will look at, and that is the price to sales ratio. And when you talk about Megaport, that's at 31 right now, which is a little bit higher. Well, on the high side, I'd like to say. But this company does have a lot of potential. They are a global leader in what they do. And sometimes you do have to pay for quality and global leaders of an area. So for Megaport's case, you do have to pay if you want to become a shareholder. So on to their Appendix 4C. And first up for me always is the cash flows from operating activities. I want to look at receipts from customers, which is always the first thing I do look at, and I do have an idea of what to expect when it comes to receipts for a company. For Megaport, in the last quarter 3, they had $20.2 million of receipts, which actually did not quite get to what I was expecting. I was expecting a little bit more than that. So there was a possibility, if the market was thinking like me, we could have seen the share price being hit, but it was the complete opposite. The market loved this Appendix 4C. And finally, we always have to know if the company's operational cash flow positive or negative. And for the quarter, Megaport did burn through $4.9 million in operations. So that's not a good sign or good thing, but this has been the story for Megaport through the last 5 years. I do believe once they become operational cash flow positive, that could be an inflection point for the company. You might see a little bit more interest come in, and that could lead to a share price appreciation. But I think we're still a few years away from that. And they still have a lot of cash on hand in the company, so $141.5 million of cash. So they do have a lot of cash, no need for doing capital raisings, unless they do an acquisition or major acquisition at that. So that's a good thing to have that amount of cash. When you look at the receipts history for Megaport since they IPO'd, so the first quarter in January 2016, they had $540,000 in cash receipts. So the whole point of a growth company is you need to see an upwards trend in their receipts history or their revenue. If you're looking at revenue, you want to see this sort of graph. And in fact, there is an exponential increase in their cash receipts from January 2016 to January 2021. So in the previous quarter, they did have $25.8 million of receipts. So I was expecting maybe a similar number this quarter, but a little bit down from that quarter. So this exponential rise in receipts might be coming to an end, and in fact becoming more linear, which is not a bad thing. But when you calculate the compound quarterly growth rate in receipts, we are looking at a number of 18.8%, which is quite impressive for a company this size. It is off a low base, but even though we are still seeing those sort of growth rates over the past few years, so very impressive growth rates, and you have to call this company a growth company, and that's why you're paying a high price if you want to become a shareholder in this company right now. For any company like Megaport that is non-profitable but has growing revenues, I do like to look at the historical price to sales ratio, because this can show you when there is a good time to buy into a company, when there is good value there. So you need to know what the historical typical price to sales ratio is for Megaport. So if you go back 3 years, this is looking at the past 3 years. If you go back to May 2018 to 2019, you can see the price to sales ratio for Megaport was hovering around 20 or so. So that could be a good ratio to buy into, around 20. Then we went through a period of multiple expansion from May 2019 to September 2020, when the price to sales ratio was increasing. So the market was willing to pay more and more of a premium for Megaport through that period. And what that does also means was the revenue growth rates have to increase a little bit more to try to catch up to the multiple expansion. And it didn't quite do that. And then we've seen the share price decrease over the past 8 or so months, which means that price to sales ratio has drifted back from about 40 to about 25 or 24 as a low, and that has increased in the last few weeks because the share price has increased. And we've also seen with the new Appendix 4C higher revenues come in. So at this point in time, with a price to sales ratio of 31, it's neither expensive in regards to historical price to sales ratio, it's also not good value when you look at the historical price to sales ratio. We need to see the price to sales ratio slip back to say 20. If it got down to 15, that's when I'd get really excited, because that would be the low period during the past 3 years, and that could be possible good value territory for this company. Now onto the 1 year daily chart for Megaport. Share price reached a high of about $17.50 in late August, early September. At that point in time, the price to sales ratio was around 44, 45. So we're paying a major premium when it came to buying into Megaport if you did take a position at that point in time. But I would suggest that was a high risk, low reward sort of play. And ever since that high, we have seen the share price drift lower and lower. In fact, there has been a new downtrend develop right there, and every single time the share price hits that downtrend, there, and there, the share price has retreated and pulled back. Now, in the last few trading days, we have seen the share price get to that downtrend, actually move above it, and the reason the share price has increased has been on the back of this Appendix 4C. The market did like it. And sometimes you will see, when you do see the catalyst for the re-rating of the share price like this, on a little bit higher volume, that can be the catalyst of a new developing uptrend. So if the share price does move sideways, keeps above the downtrend, we might see a new uptrend developing in Megaport. Conversely, we might see the share price pull back below the downtrend and move towards $12, $11.50, and that would be confirming that downtrend is still intact, and this was just a testing of that downtrend. So all my eyes, maybe not all my eyes, but my eyes will be on the share price movement of Megaport over the next few weeks, because I think it'll be very important to see if we're seeing a new developing uptrend or this is just confirmation of the downtrend. And that's all I've got to say for Megaport in regards to their Appendix 4C for April 2021. Hope you've enjoyed this video. If you are a shareholder of Megaport, make sure you leave a comment in the comment section, particularly if I have said anything wrong or you want to clarify any comments I've made in this video. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial circumstances. Otherwise, that's all for this video. Have a good day. Bye.